Boom and crash market is one of the very scary and friendly markets. It's scary due to its structure in buying and selling. The fear of spike makes it scary for beginners. Even many professional traders also stay away from the boom and crash market due to the spikes, and it is friendly because that is where many traders started their trading journey. It's a very volatile market with no spread compared to other markets. It requires no much technical analysis knowledge to trade boom and crash. It's easy for a beginner to start the journey with just a simple indicators, and it will make profit from the market. That is why boom and crash is very popular among the trader, especially among the beginners. Welcome to this new 30-minute strategy that is going to improve your trading skills and make you a lot of profit out of the market. My name is Akinola King. I am the lead instructor from KingFX Academy. If you are new to this channel, please, at the end of this video, if you deserve a subscribe from you, please don't hesitate to click on subscribe button, like, share and comment under this video. And if you are a returning subscriber, I welcome you to this video. This strategy has 3 rules you have to stick with. First, number 1 rule is first determine the market structure in 15 minutes time frame. The number 2 rules, make sure the market is aligned with the structure. Number 3, find your AOI, area of interest. Let's start by the first rule that says first determine the market structure in 15-minute time frame. This is 15-minute time frame. How do we determine the market structure? Yeah, that is the work of this moving average. The moving average is 25 period moving average. The moving average tells us the direction of the market, which is also the structure of the market. Whether the market is uptrend or downtrend, or the market is ranging. Anytime the candle is above the moving average, assuming this is the moving average here and the candle is here, that is uptrend. If the moving average comes down here and the market is here, that is downtrend. Let me quickly show you on the chart. Like here now, the market is selling. As boom used to sell, it's defaulted to sell. Here now, the market is buying. A lot of spikes happen here. That is the first rule. You come to the 15 minutes time frame. You check if this moving average is above this candle or below the candle. When you are trading boom, you should only trade when the candle is below the moving average, because you want to sell, and the candle goes below this moving average only when the market is selling. Anytime this candle is above this moving average in boom, the market is buying. Spike will continue happening in the market. You don't have to sell. You have to leave the market for that moment. So the second rule says make sure the market is aligned with the structure. That is exactly what I'm saying. So now what this rule 2 mean is that, assuming this is what you see, anytime you see this thing, the market is not aligned. If you see candle above the 25 moving average here, it's not aligned with the market. You understand? Because truly the market is not going up, it's ranging. You can see break it, return, break it, return, break it, return. It's ranging here. So you have to make sure that when you see the moving average going up, like this, the candle must also be going up. Not seeing moving average like this, and you see candle like this, and you say the market is going up. No, the moving average may be going up, but the candle is not going up, it's just ranging. So that is what the rule 2 is saying. Now the rule 3 said find your AOI, area of interest. So now where is our area of interest? Our area of interest is 5 minutes time frame. So now in this 5 minutes time frame, after determining, the first step is to determine the market structure. After we have confirmed that the market is buying, boom, we are not going to buy. Assuming we come to check when the market is around here, that the market is selling, then we go to 5-minute time frame. That is where we find our entry. What is our entry? Our entry, we are only looking for one candlestick pattern. Let me repeat that, one candlestick pattern, and the name of that candlestick pattern is called spiny top. I don't know whether we have heard about that before. It's called spiny top. If you know much about technical analysis or price action, you will be aware of spiny top, because a spiny top is a candlestick pattern that has a short real body. It has a short real body that vertically center between long upper and lower shadow. That is spiny top. The candlestick, this particular spiny top pattern represents indecision about the future direction of the asset. It means neither buyer nor seller could gain the upper hand. You understand? They conclude that this particular candle represents indecision in the market, that anytime you spot the candle, it means that the buyer and seller, none of them has the power in the market. No one knows where the price is going to go. But with the help of the market structure, we know where the market is going to go. That is why you are here. We are going to know where the market is going to go. This is what we are looking for here. So let me also see whether I can spot another one. This is doji. Doji and spiny top works as same. You can use doji too. Let's see. This candlestick, if you can spot 2 or 3 in a day, is good for you. You are good to go, because it's very, very effective. This is another one. You will have used this first one for your entry. You don't just spot it and enter the trade. You have to confirm something. There are some confirmation you have to carry on before you can know whether the candle is valid. You understand? This is another one here. If you can spot 2 to 3 in a day, you are good to go, because you are going to trade that for 30 minutes. You know how much you are going to make in the market for 30 minutes when your trade is going right. So guys, the first thing to do is, after you have confirmed that, the market structure in 15 minutes time frame, the structure must be aligned with the 5-minute time frame. If you see the market in 15 minutes time frame, this moving average going down, it must also be going down in 5-minute time frame. There must be an agreement in direction between these two moving time frame. That two moving I'm sorry for that. In these two time frame, 15 and 5 minutes, there must be an agreement. You understand? So anytime the moving average is going up in 15 minutes, it must be going up in 5 minutes too before you can enter. Though you are not enter for buying boom, you are selling in boom. It's only crash you will buy. So in boom, you have to wait for the 15-minute time frame to start selling, then wait for 5 minutes also to be in agreement with the 15 minutes. Then you started looking for this candle we are looking at. So I spot one not long here. Okay, this is one, but this is not valid. The reason why this is not valid is that before you can confirm this candle as a valid one, you must be able to count 5 to 6 candle below this moving average before you spot this dodgy candle. Let me say that again. You must be able to spot 5 to 6 candle before you spot this candle. That is why you can know that this one is valid. Like this one is just 3. before this spiny top. So let's see. Okay, fine, we have another one. Let's see how many candle from here to here. More than 6. Then you enter here, then you count your own 6. This is 5 minutes. 30 minutes divided by 5, that is 6. You understand? So you are taking 6 candle, that is 30-minute trade. So now let's back testing. Here the moving average is down after confirming from the higher time frame. Make sure it's also down. That is what gives you the confidence in this strategy. So the spiny top is our area of interest. You understand? So let's find another one. I spot one. So this yes, so I will consider this too. You can see it's happened that more than 6 candle has happened here. Then you count your 6 candle. If you count your 6 candle from that place, this is 1 2 3 4 5 6. So you'll have entered the stop the trade here. You will escape this spike. 30 minutes has already complete. Another one, this is another one here. This is another one, this first one. Because if you count this candle from here to here, you see that it's more than 6. Or 6, 1 2 3 4 5 6. It's 6 exactly. Then you enter from this first spiny top. Then you count 1 2, though the price doesn't first agree to go in your way, but after like 15 minutes it started going. So you will have closed the trade in profit around here. You understand? This is how the strategy works. So, and take note, you must have nothing less than $30 in your account, and don't enter more than one position where you have $30 in your account. This is another one. If you count this candle is more than 6, then you count your own 6 and you exit the trade. So let's check spike crash too for buy. So after you go to 15 minutes time frame and you confirm that the candle, like now, the market is now aligned with this thing now, because the market is ranging here. Though the candle is above the moving average, but it's not aligned because it's ranging. You must see something like this. It must clear like this, that this trend is going up and the candles also are going up, not the ranging markets like this. You understand? Not the ranging markets like this. So you go to 5 minutes time frame after confirming the direction of the market in higher time frame, which is 15 minutes. Then you start finding the spiny top. So you can see this is one here. You enter here. Let's count. You count 1 2 3. The third one, the spike happened. 4 5 6. You close the trade here. You enter from this place and you close the trade here. Now how much profit you're still going to make? You cannot close the trade in loss. That is one thing about this strategy. I won't talk much until you go to your demo account to start using this strategy. You can see this too. The 6 candle complete before the spike happen. So I can still consider this as the spiny top. I will show you the spiny top. You understand the picture before I close this video, and then you can also go online, go to Google and search spiny top. See how it looks, so that you won't misunderstood the strategy or you won't take another candle for it. So you enter the trade. That is just go to you can see this one too, very clear. Anytime you spot it on 5 minute time frame, it's sure that you surely get your 5 to 6 candle. 6 candle, I say 6 candle, that is what makes 30 minutes. 6 candle before any spike will occur. That is how you can hold the trade for 30 minutes instead of scalping for 2 3 candle, 4 candle, 5 minutes trading. You can start trading 30 minutes with this strategy. Try to find the confidence. Giving strategy and finding the confidence is two different things. You can learn too many strategy without gaining any single confidence. You have to find the confidence by yourself. That is why every broker provides demo accounts. Demo account is for you to gain confidence in your strategy. I always say that. So go to your demo account, find this candle top, follow the rules in this strategy, and find this particular candlestick pattern and started trading with it. You understand? I wish you happy trading. Let me show you the moving average. It's just 25. Method is simple, applies to close. Style 4 pixels. You can use any color of your choice. Then click on done. That is what's made up of this 25 period that gives us the market structure. So guys, I wish you happy trading. If you are yet to subscribe, please do so. That is the only motivation we can get from you. Bye.